Hello and welcome back, guys. So we are continuing with Moyes exam kit of SPR, okay, 2018. So in question number C, what we are required to answer about is that it says that advise the directors as to whether Watson should be classified as held for sale and whether both it and Barham should be classified as discontinued operation. Okay, so whether it should be classified as held for sale or it should be classified as discontinued operation. So how do we do that is that in case of assets held for sale, so we are required assets held for sale, and then after that discontinued operation, right? Continued operations, right? So in case of assets held for sale, so Watson, right? So it says about Watson, okay? So Watson, where does it talk about Watson? Watson, right? So what has happened is that Moyes holds 52% interest in Watson. Watson had a previous issued share options to other entities which are exercisable in the year ending 30th September 20x9. It is highly likely that these options would be exercised, which would reduce Moyes' interest to 35%. The directors of Moyes require advice as to whether this loss of control would require Watson to be classified as held for sale and reclassified as discontinued operation. Okay, so let's define what is assets held for sale first of all. So IFRS 5 says that IFRS 5 assets held for sale and discontinued operations so what happened over here? Discontinued operations defines an asset held for sale as one where carrying amount will be recovered principally through THRO is through sale transaction. And for an asset to be classified as discontinued operations, or what we can say is that, for an asset to be classified as assets held for sale, the following criteria must be met. So what are the criteria is that, so criteria number one, so what I'll do is that criteria such as a sale is highly probable, management is committed to sell, an active program to locate buyer and the assets should be available for sale in its present condition. Okay, so what we are required to talk about is that in case of Watson, in case of Watson, case of Watson, it does not seem to meet any criteria as management isn't planning to sell. However, IFRS 5 does not give explicit requirements for held for sale to situations where control is lost. Normally, when control is lost, the subsidiaries assets and liabilities should be derecognized. So when a significant event such as losing of control happens, it changes the relationship between all stakeholders, which should trigger reclassification. Okay, so uh, it would be subjective whether to classify Watson as held for sale. Okay, so for Watson it's already done, so it's just that we've lost control. That's what they are trying to test us about. So committed through sale in its present condition. However, then for discontinued operation, IFRS 5 defines discontinued operation as a component of an entity which either is disposed of which either has been or is classified as held for sale. Okay, it should also meet the following criteria. Number one being it should represent a separate major line of business or geographical area of operation. Second is a single coordinated plan to dispose of a separate major line or area of operation. And the third criteria being is a subsidiary acquired exclusively for resale. Okay, so these are the requirements that a company needs to fulfill if it is to meet the definition of discontinued operation. Okay, so it is which has either been disposed of or either the entity which is classified as held for sale. Okay, so which would be classified as held for sale is that the company whose carrying amount is expected to be recovered via sale. Okay, so we are discussing about, so let's look at what has happened to Barham. So what did we do with Barham? Whether the disposal of Barham should be treated as discontinued operation and separate disposals within consolidation and the profit area. There are several other subsidiaries which all produce similar products to Barham and operate in similar geographical areas. Okay, Barham is sold within the operating year, but there are other subsidiaries which appear to be which operate, okay, which operate in same geographical area and produce similar product. In the standard, little guidance is given as to what constitutes a major line of business or geographical area. Okay, so we don't know where the boundary is for a geographical area. So it is subjective. It's subjective. So the directors should consider materiality and relevance before determining whether Barham should be classified as discontinued operation. Okay, so I'll just correct all my mistakes. So standard determining produce in the same geographical area. Okay, so does it say anything about anything else? Does the question ask anything else? And Bahram should be classified as hell for sale, and whether both it and Barham. Okay, so both it says about that as well. Would need to meet the criteria mentioned above. Barham also, it would need to meet the criteria mentioned above. Thus, the directors should consider materiality and relevance. So next is D number is we need to talk about probability, right? So the recognition criteria in 2010 conceptual framework stated that a flow of economic benefits must be probable before an element can be recognized in the financial statements. However, IFRS and IAS standards were criticized for applying this probability criteria inconsistently. So 2018 conceptual framework addressed these concerns. So explain how the probability criteria has been inconsistently applied across accounting standards. Measurement of illustrate your answer with reference to measurement of assets held for sale, provision and contingent consideration transferred in business combination. Your answer should discuss the board's revised recognition criteria in the 2018 conceptual framework. So we need to talk about assets held for sale and then provision and provisions, which is IS 37. And then after that, we need to talk about contingent consideration as well, transferred in business combination. And then we also need to discuss recognition criteria in 2018 conceptual framework. Okay, so let's do it then. So, different accounting standards. Accounting standards use different levels of probabilities to discuss when assets and liabilities are to be recognized. For example, economic benefits from property, plant, and equipment and intangible assets need to be probable, right? To be recognized. So higher than 50%, right? That was the definition of our asset. So in that in of 2010 conceptual framework, this IAS 38, and then after that IAS 16 has been designed accordingly. Okay, so economic benefits need to be probable to be recognized. So in this, what I mean by different accounting standard is that IAS 16 and then IAS 38, okay? Intangible assets. What I could do is that I'll just write it down in a bracket. IAS 16 and then after that intangible assets is IAS 38. Need to be probable to be recognized, right? To be recognized, okay? And then even for a control. See, what we've said is that the sale should be probable, right? So there is a probability criteria as well. Even for an entity to be classified as held for sale as per IFRS 5, assets held for sale and discontinued operations discontinued operations, the sale should be probable. So even this should be probable. This contains probability criteria. Under IAS 37. So let's talk about provisions. Provisions, contingent liabilities, and contingent assets. Contingent liabilities and contingent assets. A provision should only be recognized if an outflow of economic resource is probable. So probable, I'll just highlight all the probable. Okay, probable. Whereas in case of whereas for contingent assets can only be recognized recognized if the economic inflow can only be recognized if the economic inflow of economic benefit inflow of economic benefit is virtually certain. Virtually certain, right? So this creates a hard situation where two sides of same court have two different accounting treatment. Despite the likelihood of payout. Okay, so and then what does the question say that we need to talk about? It says that we need to talk about, so consideration provision, we talked about that consideration. Okay, contingent consideration, what could be there in contingent consideration? So as per IFRS 3 business combination, contingent consideration is transferred, is recognized regardless of probability, right? So there is nothing about probability in that, but regardless of probability. But if there is a variable consideration, then the fair value or then the adjusted fair value reflects the uncertainty of the consideration, right? So remember how we basically multiply it by probability, or like how much is the likelihood of payout based on that. We do that, and then after that, so we did talk about that as well. And then what do we need to talk about is that consideration, no, conceptual framework. So let's discuss about conceptual framework. Okay. So now we've highlighted the problems that were earlier on. So how did conceptual framework actually address this problem? In the 2018 conceptual framework, conceptual framework, the board confirmed a new approach to recognition, which requires decisions to be made with reference to qualitative characteristics of financial information. So framework, reference, approach. So the probability, the quantitative requirement is now gone by. So it further says that an item is recognized if it meets the definition. First of all, it should meet the definition, and if recognition provides users of financial statement, or if it provides relevant and a faithful representation of assets and liabilities. Okay, so this is what it basically says. The key change in the 2018 conceptual framework. So let's see, do we need to explain this thing as well? So revised recognition criteria address these concerns. Yes, they happen. Address these concerns. Conceptual framework was therefore to remove the probability criteria. will, mm, since the since standards such as IAS 16, IAS 37, IAS 38 were developed based upon 2010 conceptual framework. So when they are revised or when any other standard would be developed from now on will not contain probability criteria. Criteria, right? So therefore, this means the assets and liabilities with low probability of inflow or outflow of economic resource will be recognized. The board also accepts that prudence could still mean that there will be inconsistency. So remember, like if you're recognizing asset or liabilities with a low probability of inflow or outflow, that means that there will be inconsistencies, right? So board recognizes that even though it says about prudence, so prudence does not mean that you'll have everything right. Okay, consistencies, even though there is inconsistencies in the recognition of assets, in the recognition of assets and liabilities in financial statement, assets and liabilities in the financial reporting standards, but may be a necessary consequence of providing investors and lenders with most useful information. So that means that it might provide that as well, because for so suppose if there is an asset whose probability is not so high, that does not mean that that will not be received in the future. So if it basically provides relevant information and faithful representation, then it should be disclosed. Okay, so prudent does not always mean that there won't be any inconsistencies, but it accepts that there will be inconsistencies which will also be mentioned. Okay, so that's up to the investors and lenders to decide whether they will take into account that when they are making their estimations or not. It's up to them. But our it will be a subjective thing for the board of the company, okay, to whether to disclose it or not. So sometimes, like, you might say that the probability is very low, but still, like, normally when they are making a provision in bank, like for losses or in case of loans. So if the probability criteria has been removed, and then if the bank feels that in order to provide more relevant information, they should actually create a provision for outflow which has a low probability, then they can do it from now on, okay. So that's what it basically means. So this is all, guys. So second part of Moise, and then we'll look at banana as well, September 2018. I'm so sorry for the sitting outside and trying to prepare this thing. So yeah, if you have any other questions, please do comment down below. I'll definitely answer it for you. Until next time, bye bye.